I mean, I have a pretty good background. I have a finance degree. I have an MBA. I love numbers. I don't love accounting so much, but I love numbers. It's still difficult to assess and understand who I should hire. How should somebody go about thinking about that? One of the biggest challenges for new entrepreneurs is saying no to people that want to give you money. Treading water is the same as drowning to people like you and me. You better start swimming. Welcome to the show. I'm your host, Robb Green. Welcome to the Robb Green Show. I'm Robb Green. Please like and subscribe so you can listen to all the episodes. Today we've got Chris Fallon with us today from Numbers Matter and Bookkeeping. Is that right?
Almost.
Tell me what it is.
Numbers
again.
Matter, accounting and bookkeeping.
Accounting and bookkeeping. Because we just talked about the domain.
We did.
Numbers Matter Accounting and Bookkeeping LLC was not available.
Well, it is available.
Oh, it is available. It chose not to do it because it's a little long.
Well, then it would be Chris at, and that would be very long.
So you went with NMAAB.
I did.
.com. So I want to jump right into this, but it's accounting and bookkeeping for what type of industries?
Because I've been doing this for 20 years in this market, it's all types of industries.
Okay.
We do have many clients in one industry, which would be e-commerce.
Great.
And then we have many companies that sort of are in like the retail space, like liquor stores, convenience stores, things like that.
Okay, awesome. We'll talk a lot about probably the e-commerce side of things because that's my world. But I do have a recommendation for you. I did take a little bit of time to look up another domain potentially for you. So I think mynumbersmatter.com is available. You can buy it before this podcast comes out, or someone might buy it and try to sell it to you.
Yeah, I'll buy it right away.
But just a quick tip for everybody, including yourself. What I use leandomainsearch.com. You can put in any word or multiple words. It will give you only available .coms.
Oh, that's a good
and
idea.
then you can also choose to sort by popularity, length, put at the front, put at the back. That is by far the best. It's so hard to find a domain, as I'm sure you've experienced. It's so difficult to find. We come up with a new brand name, and it's unbelievably hard. We have to buy most of the domains now for any new brand, and it's never just the brand name. They're just not available. Everybody's squatting on them.
I'm going to do that as an action item right after this meeting.
I love it. All right, so tell us a little bit about your business. How long you've been in business, size of the business, team, that kind of stuff.
Sure. So I have been doing this in Phoenix since 2002. And in 2017, I had a dream about Numbers Matter. And at the time, we were a Sage accounting firm, which is a software platform.
Yep.
And I decided to rename the firm. It was just my name before that, and to go to Intuit as the platform. And something happened during COVID in particular where we grew gigantically. There was just really a team of 3 until 2019. And now we are up to 15 on staff. We have we do around 400 tax clients, and we have a little over 150 monthly accounting clients.
Wow, that's great. That's really successful business. Congratulations.
Thank you. But, it doesn't come without its challenges.
Every business has its challenges.
That's right.
The grass is always greener on the other side, whatever business we look at or think about doing something different.
I thought I made more money when we were smaller.
Is that right?
Myself.
Wow.
Yeah.
Made more money why is that?
Because I did more of the work myself, in which I didn't need to pay other people to do it. And now it's more where I'm herding cats and meeting with clients and all of that, where I need other people that I'm paying that don't really generate revenue in order to get to where we have in growth.
With 400 tax clients and 150 monthly bookkeeping customers, that feels very seasonal to me. In terms of, is that true to think about it that way, that you get more load on your business January through April?
I mean, there's certainly a lot of people who want their taxes done on deadline. They don't want to go on extension. And then there's many who go on extension, and that's fine. I think of them as 1 or 2 to 3 touches, which is if they're not accounting clients, we deal with them for tax season. We might do tax planning in the fall. Most people who do not own businesses, there's not a lot of tax planning available to them, so that doesn't really encompass everybody. But the accounting clients, because it's a monthly churn on that, it's just busy on that side all year round.
So from the bookkeeping side and the monthly clients, I've got to assume it makes it easier to do the taxes when you do the monthly.
Our sweet spot is to do the taxes and the accounting,
Yep.
especially from a tax planning perspective. Otherwise, we are waiting on someone else to give us what's happening monthly or quarterly. We have a lot of S-Corp clients. So S-Corp in particular, we want to manage people's payroll so that it satisfies either their net income or what's going on with their pass-through revenue that's coming to the personal return. That can't be managed well if we don't have up-to-date accounting.
So does it, I'm just spitballing here. Does it make more sense from a growth perspective to get more monthly clients that would lead to more tax clients?
Absolutely.
Okay.
Because we make way more money on the clients where we're doing the accounting and tax.
Got it.
Because they're paying something every month for a 12-month period.
You're building a recurring revenue stream.
Right. So for our billing cycle, we changed to December 1st of 23 to November 30th of 24.
Okay.
Every client for whom we did accounting and tax, we charge a flat rate per month for that 12-month cycle.
I like that.
That way we didn't have the cash flow swings of tax season.
Spread it out a little bit.
And there also adds transparency so they know how much they're paying per year. Before, there'd be separate invoices for software and tax planning, tax returns, accounting. So I didn't like it. It was out of control. And also I think it didn't lead to transparency for what the clients were paying on an annual basis.
What I really like from a business owner's perspective and a potential client's perspective of that pricing strategy is it allows me to smooth out my P&L a little bit. Whether if I was going to sell the LLC, which I've sold a few LLCs, it smooths it out quite a bit. So I don't have to explain it away. It's like, hey, this is bookkeeping and tax prep in a monthly. If you guys do it, the acquirer of the business does it for less, then you're going to see a savings, but you have clarity and transparency around that actual expense.
That's right.
As opposed to, one lump sum in, April or October, depending if you're extending or not. I think the real challenge, and this is, I've worked with a few accountants and done some bookkeeping myself, especially when I first started. We've done some in-house. We've done some service providers. I would love your take on how should a business owner choose a bookkeeping or tax service provider? Because I have a pretty good background. I'm a finance degree. I have an MBA. I love numbers. I don't love accounting so much, but I love numbers. It's still difficult to assess and understand who I should hire. How should somebody go about thinking about that?
We often will encounter clients who are unhappy. So I always ask, well, what are your pain points so far? Like, why are you making a change? Because most people aren't changing their accounting firms very frequently.
Right.
They're only changing them when they're unhappy.
Okay.
And they're unhappy for a specific reason. And so we look at what those reasons are. What I hear most often is they're not being heard. The accounting firm they were working with was not communicating with them. Get very difficult to get any answers to questions that they might have. Or in the case that is, I think, a frequent problem in accounting is that they would only be in contact with them a couple of times a year. So I think that for us, we try to be really available to the clients. Everybody gets my cell phone number. We have a staff. We have a practice manager. We have a super admin. Everybody gets those people's information. All of us have scheduling links in our email. So I think that we do that a little bit differently. But when I often am asked in these types of settings, well, what makes a good client? Well, my number one thing is don't be a dick. So
I love it.
Yeah, don't be a dick. If you're a dick, you're not going to get to be a client.
Perfect.
That's all there is to it. And so conversely, like, I'm not going to be a dick. Like, I'm really great with the clients. I do really well with my interaction with them. And I think we really make a difference for clients where they're passionate about what they do. They're really interested in the numbers, and they value what the accounting information provides to them from a managerial level. So if you're not in that, if you're a dick, you don't value the accounting, you're not interested in what the information is going to provide to you, then you're not a good client for us. And we're not a good client. We're not a good accounting firm for you. So when I think about looking at it from a client's perspective, is it going to satisfy your needs? Are you really interested in tax planning? Do you have complex data that isn't being handled well? Those are all great reasons that we would be a good fit.
I want to double click on the dick comment. So what are the most common characteristics of clients that are dickish, for lack of a better word?
Oh my God, there's so many characteristics, unfortunately. So we recently had a client who kept questioning what they were being charged, like what was it? And they were putting in the list things that had nothing to do with us, like the payroll service or their 401k and things like that. And I thought in that particular case, because it's a low touch client, also their accounting wasn't very complex, that their billing rate was highly reasonable. And then they kept changing they kept canceling appointments or not showing up. And then one day they sent an email and said, I'm going to go with our other accounting firm after all. And I said to my assistant, I'm like, hallelujah.
Thank
like
God.
I didn't have to do that myself. They left on their own. And then just the other day, they booked time on my calendar. We made a mistake and we want to come back. And I said to the staff, I'm not sure I want them back.
No.
So let's talk about that at our next meeting. So I'm really very good about weeding out people who are non-communicative, non-responsive, have an attitude, bitch about their fee. So.
I think that that's you're an experienced entrepreneur. One of the biggest challenges for new entrepreneurs is saying no to people that want to give you money.
Absolutely.
Because not all customers are equal, as you know. And generally speaking, I'd probably say, the old 80-20 rule, but I'd probably say it's probably 95-5, where it's 5% of the customers or clients cause 95% of the issues.
Absolutely.
Which is the grind on the employees, grind on the team, grind on you. And I mean, when I used to do more customer-facing interactions with previous business, I don't want to. You're not a good fit. I want to buy from you. That's totally fine. I think you should go find someone else to buy from, because we're not a good fit for you. The way we do our business and what your needs are for the tiny amount that you're paying for our product, it's not a good fit, and that's okay. Just move on. And I think a lot of people are afraid, especially when they're new entrepreneurs, to do that because they only see it as income. And I need the income.
And they need the money.
They need
Absolutely.
the money. Yeah. And it's good to have that confidence in what you're delivering, that you can say, hey, listen, I know the market. We're charging a fair price. We're delivering great service. So if you don't find it to be that case, that's okay. There's plenty of other providers out there, and we're just not the right provider for you.
Absolutely.
So I love that. I love that approach. We were talking a little bit about beforehand and some questions around like staffing. So how do you think about your business is a good margin business, but you're not selling information products. So there's labor that's required, and there's, I'm assuming, some software costs and some hard costs that you have. You have a team that's overseas, and you have a team that's in the U.S., just like I do, I believe. So when you think about that, and I'm in a similar boat, to be clear, in e-commerce, we don't, especially product-oriented businesses with inventory, the margins are not always great, depending on where we're procuring the products from. So it's challenging in the U.S. to hire really great employees because they're very expensive. When you can get somebody overseas for similar quality for a fifth of the cost, maybe, or a sixth of the cost, or even a quarter of the cost. How have you kind of thought about that or worked on that as you've grown your business?
I would say it was probably 3 years ago. We started with someone offshore, and how we got there was I had been approached for a few years before that from one specific company, and I had toured remotely their facility in India, and I met all the principals and went through all their security systems and looked at it. And I really hesitated because I had always told people that we had onshore people only, U.S.-based accounting staff. So we started with one person. They were highly educated. They really knew all sorts of interesting, complex accounting and tax work, and they were $12 an hour. They always showed up on time. They were always at work when they were supposed to be. So now we're at 5 full-time people in India, but it still has been a struggle in that we meet with them frequently. We use Slack as our communication tool with clients and with the offshore staff in particular and the onshore staff. But we have a new hire that starts on Monday. He's an enrolled agent, and he will probably make around $80,000 this year over the next 12 months. And that is really 3 or 4 of the offshore people. But the decision was complicated because I think that we definitely have the capacity offshore and the ease of adding additional staff. But I've been hesitant about client communication being with anyone offshore.
I think I can share my experience with this because we've had quite a few people offshore, Philippines, India, Pakistan. We've been looking a little more towards Latin America. And and we've had full U.S. also before all that. And what I've realized is that depending on the type of business you have and the margin you have, it's very difficult to hire people in the U.S. That are great people. If you're hiring like a lower level job or a restaurant, obviously you need people in the U.S. that can be on site, right? But if it's something where it doesn't have to be on site, it's just challenging from a cost perspective to be able to do that and compete with somebody who is offshoring. What I have found to be the most helpful is the hub and spoke method. And so we have somebody maybe that is at the center of the hub. That's the U.S. employee who is smart, strategic, gets stuff done, project management almost. And that might be in a certain category. Let's call it sales and marketing role. And then underneath them, they have support individuals that are overseas. And those overseas individuals take on some of the support roles, some of the tasks, and then they can delegate out. That introduces a new problem, which is a lot of people don't have experience managing offshore teams. But we have found that to be the most successful for us because that allows us to still have the person who's sitting at that hub have those interactions with U.S. suppliers, with Amazon, with whoever we're dealing with in the U.S. Because what we found was it was a cultural challenge. Not speaking up when things were wrong, not approaching it the same way someone that grew up in the American culture would experience. Have you had some of those thoughts or challenges also?
Right. So I would say that we're sort of in the hub and spoke in that the offshore team does all the grunt work. So they're coding bank transactions, they're reconciling the bank accounts, they're prepping the data for the onshore team to look at and disseminate to the client. The onshore team then meets with the client, except for European e-commerce. We have e-commerce clients who are themselves European but own US-based e-commerce firms.
Yeah.
For those, I don't mind that the offshore staff sits in with me on the meetings because they don't care whatsoever about that. And the one that sits in with me, there's not really a language issue. He's also really great in e-commerce accounting, so that's went well. I think what hasn't went well is they do seem to be afraid of me. And I can't seem to show them the puppy my way out of that, which I did last week during a meeting. I had my puppy in the office. And
a real puppy.
A real puppy.
Okay, yeah. Not the fake puppy.
No.
Okay.
And then I realized afterwards that I don't think people in India have dogs in their homes. So I don't know.
There you go. Cultural gap there.
How well that went. But it was cute. And then, so they do seem to be afraid of me no matter what happens. But also, I think the bigger problem has been when they don't know something, they don't tell me that they don't know it, even though I ask about it. We'll go over a procedure or a methodology, and I'll say, do you understand this? They always say yes. And the fact is the answer is really no, but they don't know how to tell me that. And that's been a problem.
We've had the same struggles. We've tried a lot of the team building activities. We've played games, online games, video games. We've tried to bring everybody together in cohesiveness, and we still and the boss thing is real. Like, you're the boss, so there's a certain respect that comes with that. That alone is enough for them to be afraid to tell you what's wrong. They don't admit mistakes as often. So we try to make it a safe space, create opportunities so that they can tell us when there's a problem. How do we get them to give us feedback? Like, not just, yes, I understand. Great, give it back to me like you understand it. Like, how do you understand this to be the case? And I mean, I'll be honest, we haven't figured it out. We're trying all the time, and I have a lot of friends that have overseas team. I feel like this is a perpetual problem with everybody I know that has an overseas team. So I don't have a ton of insight there. We are moving a little more towards Latin America, and the reason being is that time zone is not a problem then at that point, or limited problem. Even if they work on our schedule overseas, you still have challenges because it's the middle of the night for them. Or if they work on their schedule, which we have usually like a hybrid. So one person in the Philippines will start at maybe 1 p.m. our time. Another one might start at like 5 a.m. our time. And so there's like a hybrid, so they're overlapping half their shift with us. But it's a struggle. I mean, it's a real struggle that all my friends that have overseas teams have struggled with, is the cultural challenges of getting to clarity and transparency and managing. We've had a little bit of success with having a really amazing employee overseas that manages the team overseas. And then that person is the one person who's not afraid to tell you how they feel and problems and challenges. And they are, but that is very challenging to find. In my experience, most of those people have come from a Fortune 500 employee background. So they've gotten accustomed and learned the culture, and then they're able to give that feedback to us. That's been a big thing. I do want to double click on the sales and marketing side of your business, because e-commerce is where I live and breathe. So what portion of the 150 monthly would you say is e-commerce? Is it half? Is it a quarter of the customers?
No, maybe a quarter.
A quarter. Okay. Mm-hmm. There's a huge opportunity in e-commerce. You've already experienced some of it, but in my opinion, so many people got into e-commerce without any financial background or corporate background, right? Because it was a relatively easy over the last 10 years to get into e-commerce. And most of them know they should do accounting and bookkeeping, but don't. And I have a mastermind, and we get together. It's all successful 8-figure plus sellers. And I've looked at some financials that make you shudder. They're all messed up and don't know what line items are, don't know what they mean, don't know where they are. We've had a guest come one time, it was a year or two ago, and he started running through his numbers and talking about them. And I'm like, well, let's look at your P&L tomorrow morning at breakfast. And I was like, wait, what is all this? What is all this expense? And he had like 2 CFOs, and he had like 3 people running bookkeeping, and I'm internally US based. And I was like, what is going on here? So I think there's a massive opportunity in e-commerce. One thing I wanted to ask is, doing the work and putting together the financials is one piece of it. How do you think about, I hate to call it education, but providing the insights to what those numbers mean to a business owner? Is that something you think about as your role? Is it something where you can kind of bring some business owners together so they can collaborate on it? Because I think there's a big gap in education for business owners around, what does this number mean? What is an expense? I mean, really basic stuff. How do you think about that?
I think that's an ideal. I'm not sure that at least in the clients that we're working with, they are just run the gamut. Some of them really do appreciate that, where we're looking at the financials, particularly what's going on in the balance sheet, and suggesting that maybe it's not as rosy of a picture as what they think it is. Sure. And this is why. And last week I met with one of our clients who is in litigation and was asking about some questions related to what does it look like. And I said, well, it looks, pretty bad is what it looks like from, if I was looking at your balance sheet, I wouldn't touch you with a 10-foot pole. And here are the reasons why. But I think that he already knew a lot of that. I think that for a lot of the clients that are U.S. Business owners doing e-commerce, the ones that we've been working with seem to be pretty savvy with their numbers. So I think that part hasn't been a big challenge. Now, the bigger challenge has been our European clients who are not used to owning a U.S.-based e-commerce business, have no clue about sales tax, for example, or anything about it, because they're used to that, which is much different. So there's a lot of education there. But in one example, we have a new e-commerce client from this year who ideally is going to be a big client. They're trying to figure out their marketing, I think. But I've had probably 3 or 4 hours of meetings just on sales tax,
Nexus?
Well, talking about Nexus, how does that work? We spent probably 90 minutes just on the drop shipping location and what does that mean for Nexus, and Avalara. We use Avalara in this case. So what does that look like? But they just couldn't figure it out. They kept on talking about it as an expense. And I would explain, well, it's not really an expense. You're charging the client money. You're remitting the money.
It's a pass-through.
Pass-through. There's nothing expense about it. And I still don't know if they understand that's what's happening with them. So I do really enjoy that type of education with the clients when they really need it. So far, our onshore ones have not needed it quite as much. What we've run into is more often is they've started a business, maybe out of their garage, and then it boomed.
Yep.
And then everything's in disarray. Sales tax is in disarray. They don't understand like that they don't have the right payroll set up, or the people are on
Very common, by the
contractors
way,
and not
all the
payroll.
time.
Yeah.
All the time.
Yeah. And then they feel bad about it.
Sure.
But I'm always like, well, if you had started an accounting business, then maybe someone would judge you. But since you are selling the best widget and you're really happy about that, and you've got a lot of views about your widget and you've made good sales, then that's what you should focus on. You can hire people to do the rest of it. So.
Okay, so got a lot of questions. Can you give us a 1 minute or less explanation of sales nexus? Because I think most people, I'm familiar with it, but a lot of people really struggle with this concept.
Right. So we have a new e-commerce client that sells a particular type of car wash supply, and they have they don't have a physical location necessarily in Arizona. They have a mailing address, but the people are here and they're doing the sales function in Arizona, and the LLC is in Arizona.
Yep.
They have nexus by definition. Now they are going to sell to Texas, for example. Texas has a really high nexus. I think it's something like $200,000 a year, or it's an item count. So many states have an item count or a dollar value. So if you hit over the item count, you sell 200 books in a state, for example, that could give you nexus in that state. The reason we use Avalara or TaxJar particularly is that they have great software that monitors all of that for you. There are roughly half the states are in the compact, which means there's not really a lot of hoops to jump through for filing and remitting sales tax in those states. The other ones, someone has to set up a sales tax license and then do the remittance, which can be set up in those automated platforms as well. Usually Nexus has to do with physical location, dollar sales, or a number count of sales.
And Nexus can also happen if you're using a warehouse potentially
Absolutely.
in a state that is housing your goods and you're selling out of that state.
That's right.
And that's where I think a lot of people get into trouble. And from my experience, and there's been a debate over the last decade or so about Amazon, right? If you're selling FBA only, Amazon's got warehouses in, I believe, every state, multiple warehouses in every state. So are you, if Amazon decides to put my products in Rhode Island, do I now have Nexus in Rhode Island?
Usually what happens in that case is that Amazon is collecting and
now
the
they
sales
are,
tax.
which is great.
Yeah, so you don't have to worry about that.
They used to not do that, and there was a big debate about
Yeah.
that for a long time, and now I believe Amazon takes care of a lot of that for the FBA stuff.
It does. Yeah.
Well, thank you for that. I think that the challenges, so another thought around this is, and we talk about a lot of this in our mastermind and amongst friends, is if you're a solo entrepreneur, if you're an entrepreneur that's maybe had a business for less than 5 years, a lot of people don't know what I should be paying for certain expense lines. So like when I look at financials, I like to see percentages. I like to see each line item has an expense, whether it's a revenue or expense, because as a percentage, so I can understand what is my percentage over time for that expense or that revenue line item, but also a benchmark. An example is a couple of years ago, we were in a mastermind and one of our friends, we did this, everyone presented their financials, 12-month P&L. And a guy put his up and it was like, wow, and it was China product. And I was like, hey, this is like, you're like 7-8% of revenue on shipping. You sell a really light, small product. And he was doing like 8-10 million a year, I think, in revenue. I was like, how is that possible? Like, that's abnormally high because we had benchmarked it. And he said, oh, I ship everything by air. And I said, hold on a second, what do you mean? He goes, yeah, I ship everything by air. I'm like, you put nothing on a boat ever? And he's like, no. I said, it's 10x the cost, 8 to 10x the cost to ship via air than a boat. He goes, I didn't want to deal with it. And I'm like, I think he wasted about 120 grand that year. He sold the business for 4x, $500,000 in revenue or enterprise value that he didn't create because he didn't want to deal with it. I'm like, pay a guy 30 grand a year just to do that if you need to do that, right? Or hire someone to do that. So I think there's these opportunities because there's a lot of ignorance around the accounting side and around like what the benchmark is. That might be a real value add for your clients because you've got the data and you can anonymize it, right? You don't have to share what it is, but especially amongst a sector like an e-commerce, hey, listen, just so you know, the average expense for shipping or freight shipping is 2% from China. This is a benchmark. You guys are at 6. Might be something we want to consider.
And I think we do a pretty good job on that. We try to I had become aware a few years ago that we were sending out financials and people wouldn't look at them.
Sure.
Or they're looking at one number, net income.
Sure.
Or they're looking at the bank balance, making bank balance decision making. And so we came up with it's basically a Word document that is, that we change the numbers every month, that gives business owners like the top 20 things of the month.
I like that.
Yeah. And so if they only read that one piece of paper, then I was okay with providing that information, and they didn't read the rest of it. That was okay with me. So I think we do that part of it. You did touch on something that I think is really important, because when I meet with new clients in particular, I'm always like, what is your exit strategy? Mm-hmm. So if you set up for your exit strategy, so in that case where, the guy could shave off $120,000 in costs for a year, they don't understand what that's going to be when they sell the business.
Yeah.
So if you start at the exit and you kind of game plan, like how many years is that? So is it 5 years? Is it 10 years? Is it whatever? And your accounting is organized toward the exit to get you the highest amount of value for selling your business, and then go backwards from there to dictate how does your accounting look in that 5-year period or 10-year period, whatever it's going to be. Then you're going to maximize your exit strategy. So we always really focus on what that looks like, and that can include, look, your margins aren't high enough, your shipping's too high, your payroll as a percentage of anything is too high, those types of numbers.
Yeah, I think, and I've sold a couple of brands, e-commerce brands, and I love the financial, I love numbers, so I love the financial side of things. I love analyzing it. For me, it's fun. A lot of my friends, they gloss over. You put a spreadsheet up, a P&L, and they just gloss over, right? And they hate it. They don't, and that's fine. Everybody has different strengths and weaknesses. And I think it's really important to think about it, because selling the business, because there's only really three outcomes for a business, right? You sell the business, you pass it on to somebody, or you shut it down. Mm-hmm. And so most often people don't think about the selling until they're ready to sell. I think the last one I sold one in 2021. I started planning a year out, because I knew I wanted to maximize my EBITDA for selling the business. So I needed to start cutting, where do I cut costs here? It adds up so fast, because it's a multiple of that number when you sell the business. Whatever that multiple ends up being, it's still a multiple of that number. And so many people wait until the end, or then make a decision to sell, and they've got all this fluff. The other thing I don't know if you see a lot, we've looked to acquire some businesses. We've acquired one, and looking to acquire all the time, these brands, these e-commerce businesses, is what we see a lot is there's commingling. I got this brand, I got this brand, and this one has a warehouse and this one doesn't, and they're all in one account. That also is something that drives me crazy as looking at financials, is that it's like, well, what belongs to what? How do I properly assess this business and look at it from that perspective? And so much is commingling. So when I sold to an aggregator in 21, they're like, wait a minute, you only have one LLC, one bank account, and one credit card for this account? I said, yep, that's it. No commingling of anything else. So they were over the hills thrilled with that, because they didn't have to take everything apart and rebuild everything. Yeah. Do you see a lot of the smaller, newer entrepreneurs that they commingle with multiple LLCs, multiple businesses? Is that also a challenge?
Absolutely. In fact, we're working on a cleanup project right now with a client. The wife started something in the fitness industry that involves brick and mortar location. The husband started something on, let's say it's in the transportation industry, and they dumped everything into one LLC. So I said, okay, well, it's very unlikely that you're going to sell this business and that business to the same buyer. That's just not going to be the same thing that's ever going to happen. So let's carve these out into two. And then that meant, we needed another LLC. We needed a new bank account. We needed a new EIN. So we do that work rather often. I think the other commingling thing that we see, especially with entrepreneurs starting out, is commingling their personal finances and the business finances. And that's just a disaster. You can't sell a business that way. It leads to not having the liability protection of your LLC. I mean, there's just a lot of problems on that side of it as well.
In commingling, they're paying personal expenses out of their business account most often, correct?
Yeah.
I mean, there might be some validity to a car if it's used for the business, or some other things, but I think some people are like literally grocery shopping out of their corporate account, which is a big no-no in my understanding.
Right.
And that's an obvious one. So it does feel like there's a big education. I think benchmarking and education for a sector would be really valuable, because I don't see it out there, I guess. I don't see a lot of this. And there's a handful of firms that people have used for the bookkeeping and the taxes in our space, in the e-commerce space. And most of them don't do a lot of education. I feel like that would be a great way to grow the business. Because you said earlier that referrals are your number one source of growing the business. Mm-hmm. Have you partnered with any groups? I'm in another group called MDS, 650 members. Everybody does at least $1 million a year on Amazon. You have to be vetted. You have to interview to get in. They pay to be in there, so they're serious about their business. Have you ever partnered with any firm, any groups like that have a bunch of e-commerce businesses? That might be an easy way to get in because it just gets you at the forefront. Happy to make an introduction if that makes sense for you on that one. They'll do like a mogul call where they'll do like their own little like interview and call and talk about this. You can deliver some value, come to a conference and speak it. I mean, I think that's a one-to-many approach with your business that I would really consider. How do you pick up 10, 15, 20 clients, 25 maybe, in one fell swoop, as opposed to the ones not there's anything wrong with picking up one at a time, but it's a lot easier for you to deliver one time.
Yeah, that's a good idea.
As opposed to that. That's the number one way I would pick it up. I mean, I probably, there's a company I won't mention, but over the last 5 years, I'd probably given them 25 clients. Just me. Because I tend to do pretty well with the financials and understand them. So people are like, who should I use? I'm like, these guys are great. They work for me. They do a good job. And call them.
That's a great idea.
So I think that would be a great way. And then build those super referrers. I know you've got a podcast.
We have a little podcast.
Okay. Mm-hmm. I think some opportunities there, maybe around like education pieces around this and benchmarking. I think all business owners, especially in today's economy, in e-commerce especially, are seeking margin, right? It's a different game than it was 5 years ago. It's harder and harder, right? Our costs have gone up all over the board, from freight to Amazon fees to Shopify. Everything's gone up, right? And so I think there's a real value. People are seeking margin. And so anything we can do to strategically think about that from a cost perspective, because it goes straight to the bottom line, it would be really valuable to people that would have their interest, would be my recommendation.
Yeah, that's a good idea.
On that. So financials, we talked a little bit about the flat fee structure. I think it's amazing, personally. I think from a business owner perspective, I absolutely love the flat fee structure, especially with the combination. It's just clear to people. It's clarity and it's understanding. We talked a little bit about also the operations side and having them in front of the offshore employees, in front of U.S.-based customers. I think it is a challenge, honestly, from a lot of people's perspective, but it comes down to the employee, the language, and the culture. I would test it. Honestly, I would test it with some of your more savvy international U.S.-based customers who have traveled overseas. I think only like 5% of Americans have passports or something crazy like that. Some small number.
You wouldn't know that from the airport.
You wouldn't know that from the airport. You would not know that. But when I've gone to China many times and gone to the Canton Fair, you don't hear English a whole lot, and you don't see a lot of Americans. I mean, I think it's less than like 2% of the Canton Fair attendees are American. So you see that over there, and you're like, oh, where's everybody? There should be all here buying products and finding suppliers. So I think that would be another alternative, is to test that with some of your clients that are a little bit more savvy and have traveled, especially if they're importing from China. I mean, hopefully they've been to China and seen their factory at that point. Where do you want to take the business? We talked about exit strategy. What do you see? You've been doing this for a while. Where do you want to take the business?
I want to take it to a place where I feel comfortable selling it when I turn 70.
Wow.
Yeah.
How old are you now, if you don't mind me asking?
58.
Oh, so 12 more years.
12 more years.
Okay, you're a planner. You're thinking far out.
Yep.
What would the business look like 12 years from now when you sell it?
Well, like, I had a meeting with the staff the other day, and we actually hit our 2024 goal in Q1.
Wow.
I know. Well, maybe the goal was too small, but it was 20% of increase in revenue. So
okay.
Yeah, so I was pretty happy about that. And so now I've set a new goal for end of 25 that is just $400,000 in additional revenue.
Okay.
And but the key is we get $10,000 a year clients all the time. Would be 40 of those.
Okay.
I don't have the bandwidth for that at the moment. I don't have it in myself to fractionalize my time by those types of clients. So the other is I could do 8 clients, for example, or less at $50,000 or whatever that math is. And I want to pivot us so that we're working with those larger clients while still holding true that, we've got tax clients, for example, that are, single chair hairstylists making maybe mid 6 figures or something, where we don't want them to feel abandoned, but that our focus is on larger clients is really where I want to go.
One thing I've noticed with companies that have made this pivot from, I'll call it SMB to medium-sized businesses, is they kind of abandon the SMBs that could turn into the medium-sized businesses. And I think that comes down to the way that you're evaluating these businesses. And, hey, I'm willing to take on a small business now that I feel could be that big business in the next 3 to 5 years. I think that would be the key in my experience. I've seen some people just make a hard right and then abandon all of the funnel of filtering in those small businesses that will turn into the medium-sized businesses down the road.
Yeah. Like we have a e-commerce client who, they blew through all their funding.
Sure.
Their product is not taking the market by storm.
Sure.
And they were unable to pay our bills. So what we did was sort of mothball them in last summer. And so they didn't really have their accounting done for, let's say, 6 months. But now they have an investor. They needed the current financials. They needed to get their taxes done for 23. And we got all that done for them, even though they haven't paid us in 6 months, because I believe in their product. And it wasn't terribly expensive on our end to get them to do that. And I know that there is a path there that even if it isn't with that product and that company, that these are really great people who have a history in e-commerce, and that something in the future is going to be great with them. So I was okay with that decision.
I love that. You mentioned also that you can't take on the 40 clients right now.
I mean, I could take on the 40 clients, but the one thing when people talk about like this is a relationships business. So kind of going back to don't be a dick. I don't want to have a relationship, with you. But, we have clients I've had for 20 years. They're getting ready to retire. I've known them for a very long time. I've spent, lots of time with them. I've watched them grow their businesses, watched them be successful, watched them go through many life's challenges. When we think about 40 more people in that mix, that's the part that, would I rather build 40 more relationships or would I rather build 8 quality relationships? Because at 40, I feel like I'm at capacity. No, the team could handle it. I can't handle it.
Okay, so I've been in Strategic Coach, Dan Sullivan's group, 10X group, for the last few years, and there's a lot of financial advisors in that group, and they have this similar challenge because it's a relationship business. Yeah. And so when they get too many clients, what they typically do is they bring on a junior financial advisor. They shift some of the smaller or easier to operate clients to that junior. Have you considered something like that where you brought it doesn't have to be a partner, so it could be an employee, it could be a partner, someone that already lives and breathes it, that could replicate yourself? Yeah.
I told our practice manager yesterday that by July 1st, I don't want to meet with clients that are below a particular threshold.
Love it.
Yeah.
Who will take on those clients then? Do you already have somebody in place?
Well, she will, they don't really take a lot of hand-holding, so she would do any meetings with them as needed. Now, if it was something more complex, then maybe someone from the tax team or someone else besides myself can jump in. For example, normally I would sit in on a meeting this afternoon with one of our clients who's a doctor. She's got some e-commerce. She's got lots of things going on, a big medical practice that's growing. I can't sit in on that meeting today. One of the CPAs is doing it. I don't need to be in that meeting. So it's also the choice of where do I really need to spend my time and who do I need to spend it with?
It kind of feels almost like an account manager role. Would be and I don't know if that you call it practice manager, but an account manager role that handles the relationships, that can help give some insights to the data. That feels like, financial background, obviously, an accountant or a CPA, but also can deal with the people side of it, because I think that's what's lacking a lot in this space is the insights and connecting the dots for people. That feels like a role that relieves you of that role.
Yeah,
And
right.
if you did it now, that would also help to take you out of it down the road, so it's not reliant on you.
Right.
Because that's the big risk with a business that's relationship oriented. When you go to sell it, is that you are a lot of the business,
Exactly.
and they buy from you. So how do you replicate? You probably read the book Built to Sell. It's about, how do you productize a service-based business, and it's all about getting you out of it so that it's a sellable business down the road. I love that model of. I love the book and the podcast too about the Built to Sell. We've thought about our business that way. And so what we did is all of the employees, everybody works for a central entity, hub and spoke again. I'm on that. I've been in the hub and spoke method lately, I guess. But every LLC then pays that hub to manage its brand and operations. And so then if I go to sell an LLC or a brand, it's one number that is business operations essentially to manage the brand. That could be all employees, it could be handling, logistics, it could be supply chain, whatever it might be, but it's just one number. So it allows it to kind of peel off and sell it with simplicity. And then the other part is it mitigates risk. And also the third part is that I don't have any of my employees have to go with the LLC when I go and sell it. So for e-commerce, it works really, really well.
So do you have each separate entity doing their own financials?
Yep.
Do you file one consolidated tax return?
I do not.
You do not?
Well, no. It's they're all files as S corps, and so each of them files their own individual taxes.
Got it.
And so then it allows me to sell. So hypothetically, one of the brands will pay $10,000 to Solving Alpha, and Solving Alpha then uses that to pay all the employees and do things with it. Well, if I go to sell that brand has an expense. An operational expense of $10,000 a month. It makes it very clear, and then the acquirer needs to assess whether they can do it for less or more than that. And obviously, if they can do it less, then they're going to be having some savings there.
Yeah, I like that.
So it's really cleaned it up. I did that a few years ago, and that's made it very easy to kind of we build them all that we can sell them, not that we have to sell them, because there's some that we've shut down and there's some that we've sold, but it allows us to peel it off with more transparency and a little bit more clarity. But the big thing for me was, how do I not lose employees that I put a ton of time and energy into and training, because this is such a fast moving space that I go to sell a brand and I have to lose like a key employee. That's been the biggest challenge for us.
Right.
So what else is on your mind? You got 12-year. By the way, I don't talk to anybody that has a 12-year plan to sell their business. So you are further out than everybody I know. What else is on the docket for you over the next couple of years to grow the business? Because I feel like you've got massive opportunity.
I think we've got massive opportunity. I would say that, like when we think about e-commerce accounting, if you Google that term, there are different platforms that come up, very inexpensive. They'll advertise, we'll do this for $500 a month or something like that. We are not in that space whatsoever. Usually for e-commerce, we're around 1% of gross revenue.
Okay.
We primarily work in complex data. So, for example, we had a client that was in the space of a recurring subscription.
Yeah.
So that at a certain income level is accrual accounting. So it's going to be revenue recognition at the time of shipment. So we're in the shipping software, we're in the inventory software, we're calculating cost of goods sold, we're looking at all of those. We're in the recurring subscription part for deferred revenue. I really like those fun clients. So kind of, I think that our future is, identifying some more of those complex clients. Now, I actually reached out to one of our most recent clients and said, look, I don't know if you're happy with your accounting staff or not, but I really like what you're doing. Are you interested in talking? And they came on board. So I think there's a lot of room for growth in e-commerce. I think that part of what we want to do is that we have partner relationships with companies like Finale, which does inventory management for a lot of e-commerce, ShipStation, ShipHero, and then all the accounting platforms. We usually use Xero for multi-currency, things like that. So get more training and more connections with the type of partner platforms that will benefit us for e-commerce clients. So we have established those relationships, but our team is not fully up to speed on a lot of what that could bring to the client. So that, for example, the kind of a recent, the recent one that I talked about that's owned by a European, they just moved to Shopify Plus. And we have a relationship with Shopify. So they're building those relationships and having the depth of training in those platforms, I think, is the next key step for us.
Great. Is the revenue threshold from cash to accrual typically $10 million a year?
So the IRS requirement is that you, over a 3-year period, average over $25 million in revenue, or you have inventory. So even if you do less than that and you have inventory, then that is an accrual path. I would say that for all of our e-commerce clients that have inventory, they're all accrual.
Wow. Okay. Doesn't everybody have accrual for your e-commerce? Or you're
because some don't have. Yeah, because some have a drop ship.
Got it.
Yeah. And
okay.
Since they don't actually have any physical inventory, then they could go cash. And if they're below the 25 million mark and they're a startup, then it's less expensive to be on a cash basis.
Definitely, it's more beneficial from a tax perspective early on, for sure.
Yes,
to incur those expenses. One idea for you, I like the partnership idea a lot. One of the biggest gaps I see in this space, especially for recurring customers or people who have subscriptions for their products, is lifetime value. It's difficult to calculate often, especially if you have a multi-channel. Amazon makes it somewhat difficult to get the data. We found workarounds to do it, but there are some apps out there that are doing that. That would be a really interesting way for you to partner, because somebody who cares about lifetime value also cares about their financials.
Yeah, that would be a
because
great idea.
They're dialed into that. So Lifetimely is one that has just come out recently, like with an Amazon portion of their app. But I've seen a few friends that have done omni-channel through them and do their lifetime calculations, and it's really, really solid. It's by month lifetime value calculations. Those kind of customers would be potentially a good fit for you as a partner, because they're dialed into that. I mean, that's where pennies matter.
Yeah.
Right. You got to get your CAC down underneath your LTV, or you don't have a business. And really understanding those numbers at a deeper level would be really beneficial, I think.
Right. That's a good idea.
So I love that idea. Well, I think this has been great, Chris. Where can people find out more about your service?
At our website, nmaab.com, which may change after today.
Or if it's not available, or that site redirects you possibly to mynumbersmatter.com.
Yeah, that's correct.
Okay. And what about you? If they want to reach out to you directly, should they email you? Should LinkedIn?
They can email me or at LinkedIn. I'm on LinkedIn, Chris Fallon. My email is chris@nmaab.com.
Awesome. Well, thank you so much for coming and joining us today.
Thank you for having me.
And I wish you much success over the next 12 years, for sure.
Thank you. I enjoyed myself.
Thank you.
If you enjoyed today's episode, please subscribe, leave a review, and share with friends. And if you're an entrepreneur interested in coming on the show, visit therobbgreenshow.com to get in touch. Stay curious and never stop learning, improving, or growing.